You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tosaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster Joe Benazzi from OptionPit.com, and Henry the Flowmaster Schwartz from Cboe. The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody, that music means we are back. It is time once again to rock out with a little bit of the old OB. My name, of course, Mark Longo from the OptionsInsider.com, as well as from the network upon which all of you folks are binging out there these days. If I sound a little bit different, it's because I'm coming to you from the southern studio. Of course, we were here down in Florida for the grand FIA Boca conference, and what a grand time it was. Hopefully, if you're hanging out on the Pro, you enjoyed the little live we did yesterday, kind of breaking down the content. It always devolves into some sort of live trading on the show as well, so that was a good time. Check it out over there on the Pro, theoptionsinsider.com/pro is the place to go to learn more. But of course, these markets wait for no man. We're seeing a lot of action, so a lot of fun to get to. Let's see who's joining me to talk another wild and woolly week in the markets. First, to the hinterlands of Chi-Town we go, where we are joined once again by the uncleist of Mikes, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to ye old show, sir.
Always happy to be here, and now that Henry's coming on the show, we know the market's going to go back to 68.45, right?
Yes, we do. It is Thursday. Spoiler alert, there is more red on the screen. So if you're doing your weekly fade of Thursday with the Flowmaster, then you're looking pretty good today. And speaking of the Flowmaster, he is fashionably late as always, but ready and raring to go. Mr. Flowmaster, a.k.a. Henry Schwartz from the hallowed halls of Cboe East. Mr. Flowmaster, welcome back to the show. We missed you down at FIA Boca this week, sir.
Well, I'm happy to be here. I want to hear from you how it's been down there, because obviously the markets have been pretty volatile. We've had our strong up days. We've had lots of down days, and I'm actually not in the office today. I'm on a little road trip with a friend from college, but I did get some photos from the office where they had a little flood, and some water came down from the floor upstairs. So I'm missing some excitement there, but I am happy to be on. And of course, even when I'm on a little vacation, I'm still trading something. So happy to get into it, and let's go.
Hallowed halls of Cboe East are flooded. Wild news indeed, listeners. Let's see what other wild stuff we have in store for us. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where you break down what the heck is trading out there. And as the Flowmaster alluded to, this market waits for no one. We talked about it on Monday, the madness coming in off the weekend. Yet again, we saw a lot of red on the screen, green on the vol screen, and green on the crude oil screen. Just absolutely wild levels out there in crude. I'm sure we'll touch on that a little bit later on This Week in Futures Options. And then, of course, we saw the regular dance out of DC now trying to talk things down a little bit. Seems like it worked for a bit. And we actually had some green on the screens for a little bit. Vol coming back to earth, crude coming back to earth on Monday into Tuesday. Then, of course, red taking over again, and that's happening again today. As we're coming into the start of the show, S&P hanging out right around that 6,700 level, off about 1%. Dow off about 1.2%. Nasdaq off about 1.3%. And our old pal, Mr. Bix Cash, hanging out right around a 26. That puts it off a little over 1 point from the Monday show, about 1.15 points from where it was on Monday. And then, of course, out to the land of VVIX, hanging out at about a 127. That puts it down 2 points. So both of them still pretty frothy, but coming back to earth a little bit as the Flowmaster is getting his navigation directions. Hopefully he's not driving while he's doing the show.
No, I'm just a passenger. Don't worry.
But before Flowmaster runs off the road, let's start with him. Mr. Flowmaster, sir, a absolutely wild week out there in the markets. Crude, WTI, Brent, pick your flavor, hitting levels we haven't seen in quite some time. Equity vol getting spicy again. VIX cash hitting a 35 level before retreating on Monday. Equities obviously feeling the pressure up there. So what is catching your eye?
Well, it's exactly that. It's kind of the to and fro that we're seeing, and that the VIX touching 35 Monday morning, it was brief. It really was only in about the first 5 or 10 minutes of the day, and we have kind of continued to see the buy the dip has worked, and optimism seems to be kind of the dominant view as we get these sell-offs. But at the same time, I do think that it's kind of testing the patience of investors, maybe some people that have grown pretty complacent and expected the markets to just kind of go higher in general. So, it's just a lot of action, right? Between, oil prices and the metals and volatility. Today we're kind of back at fixed around 25, which still kind of feels a little low, just given that, the headline risk is still significant. And then the fact that everybody kind of knows that, things get really dark, DC will put out some sort of, comments to try to, bounce the markets a little bit. So, I always say that when we get, these bouts of volatility, it's great for trading, especially, and most importantly, people that are not kind of overextended, so that if you have some dry powder and you've kind of been careful about sizing your trades, you have a lot of opportunities to jump in and jump out, and also look for the names that that you've been kind of keeping an eye on, because higher volatility means if you do want to sell some puts, you're certainly going to get a lot more premium for them. But it's just been we've seen a lot of activity, some very busy days. Today I think we're looking at about 65 million contracts, so that's pretty much in line. But I don't know. It's a big kind of sector play, right? Your people are really looking at, obviously energy has done, really, really well, right? If, with oil prices kind of sky high, and, those are the assets that these energy companies, looks like today, XLE's up almost 2%, where the rest of the market's really getting smacked. So it's just, there's just lots to dive into. I think there's a little something for everybody, the way these market conditions are.
Little something for everyone, says the Flowmaster. Well, I like it. Well, hold on. I'll come back to you in a little bit to talk about all things Cboe binaries in a second. I'm not sure if you heard, but binary / predictions, they're kind of hot. They're all the rage again. Before we get there, we go out to the hallowed halls of St. Charles Wealth Management. We are joined once again by the Unklest of Mike's. Mr. Uncle Mike, it's been a very topsy-turvy week for you out there. You're getting a lot of buy the dip opportunities, but it seems like your cabal is getting overwhelmed by the bears out there. So what do you have to say about that, sir?
Well, it's interesting in that we closed last week at 67.40. And with all the movement that we've had during the week, we're only down 35 points from the close of last week. And if you count the gap down, we opened the week at 66.99. So technically, we're up on the week if you want to count it where we opened on Monday. But this is just it's a Coolio market. The old rapper Coolio. He has the gangster's paradise. This is a day trader's paradise type of market, in that you just don't, you can't, you're not getting a lot of slow days by any means. Things are all over the map. And in the 20 or so years that I've been in this business, I don't know if I can't say that I've ever spent so much time thinking about the Strait of Hormuz. It's obviously an important spot for oil tankers getting through and the price of oil and that sort of thing. But I would have never thought, if you'd have said to me 3 months ago, for 2026, what is going to be a very important geographical point that you need to focus on this year, I would not have said the Strait of Hormuz, that's for sure. But it's something that if tankers can't get through, there's issues. And if we don't have enough oil in circulation, the price of oil is going up. And that's kind of where we are right now in the oil land. There are some stocks out there that are fairly strong, considering everything that's happening. So I'm just looking at my list of stocks here on the day. Chubb Insurance, for one, that's higher. That's obviously a good thing. We have Cardinal Health, that's higher on the day. So there are stocks that are actually higher during this. Energy, of course, is up about 1.5% on the day, looking at XLE. Utilities are things with which you can go to in crazy times. Utilities do pay a dividend. So, good things can exist still. But the other thing that I think we need to keep in mind with all of this is that, as absolutely scary as all of this is, with all the headline risk with which we have, we're down about 2% on the year. And if you were to say, okay, we're going to continue the Russia conflict, the Russia-Ukraine conflict is going to continue. We're going to take over Venezuela pretty much, and we're going to bomb Iran. Would you think the market would only be down 2% on the year? I would not. And to me, I think that is a sign of the resiliency that this market really has. Now, at some point, every market has its breaking point. And if the bad news keeps coming, if the or when I say bad news, I should say the uncertainty is probably a better way of describing it. The uncertainty continues to come. No market can hold up forever, but for the time being, this market is still very resilient, in my opinion, all things considered.
And what else is resilient? Apparently, if all things out of FIA Boca are to be believed, is the world of binaries and predictions. Everything old is new again. Everything we've seen before is hot again out there, and that includes predictions. Folks who've listened to this network for a long time know we were talking about that stuff over a decade ago with the folks over there at Nadex, who were kind of the progenitors of that space, at least here in the US. And now Kalshi all over the event this year, Polymarket all over the event this year, CME promoting their event contracts with FanDuel. They even brought Scottie Pippen down to shoot some hoops and take pictures with folks to promote that stuff. And then, of course, Cboe getting into that game hot and heavy with some XSP binaries. I felt bad, Henry, because your new CEO, Craig, and JJ, your new head of predictions, and all those folks came down to Boca explicitly to brief me on this, and I was unable to make it, sir. So I missed the briefing, so I need the Flowmaster to fill me in and fill in our listeners. What are we talking about? What are these new binaries on XSP? And do I hear, are the rumors correct? Are they staggered? Are they like 25, 50, 75, and 100? What's going on there, sir?
I like how you guys both have offices in Chicago and you're within walking distance of each other, but you specifically fly to Boca just to get briefed on it. I
Yeah,
love it.
that's what Boca is. Boca is where all of Chicago goes to get out of the winter. Pretty much.
I was
So
going
you
to
guys are
say,
smart.
isn't it some snowing again in Chicago today? So maybe that's the main reason.
No
So
snow.
no snow. Oh, okay. So I'm still actually coming up to speed on these event contracts myself, but I have talked to JJ and the team, and and I've actually traded, just to kind of get familiar with the feel of trading binaries. I think it is my job to try to trade a little bit of everything everywhere. We're starting with XSP because the vision is that these binary event contracts are kind of a stepping stone, or basically the audience is traders who aren't yet comfortable with options, or maybe they don't really even want to figure out what calls and puts are, but they can look at a contract and say, well, here's my view, and now I understand that this is a contract I can trade, which expresses that view. So XSP is simply the SPX divided by 10. So that notional size is very, very close to SPY, which is the leading ETF on the planet. And you simply will customers will be able to basically make a bet that the market's going to be above or below a level. And I believe we're also going with some spread versions, effectively. It's funny because we're coming, I think all three of us are coming from an options trader kind of perspective, where we're used to talking about a vertical spread. We're super comfortable with what the payoff looks like, and the hockey stick that flattens out at the top kind of thing. These spread contracts are very, very similar. They're not designed to replace vertical spreads. They're really designed to be kind of a complement or an alternative for traders that want to be able to effectively have kind of a one-click trade, right? And I do believe we're going for staggered strikes because in general you're trying to kind of pick the structures that are going to be resonate with traders and give people the ability to trade what they want, and the market's moving around, but without creating this this ginormous selection of strikes and expirations. In fact, I was assembling some data for a client, and he wanted to go way back. So I was looking at SPX data from the early 1990s, and I was not sure the data was complete because there were only about 30 or 40 contracts listed on a day. And I said, well, something's wrong, because if you look today, there's about 3,500 contracts listed, and it actually was correct. The S&P was around 250 back then. We had 3 or 4 expirations, and we had about 6 to 8 strikes per. So we're actually, in a way, these event contracts are kind of getting back to the simplicity of not having this giant fabric of strikes and expirations, but making it simple and making it easy for people to take a position. And by doing it with event contracts, it takes a little bit to get used to, especially if you're kind of coming at it from an options standpoint. But the fact that things are quoted in simple, I'm going to spend 50 cents for a bet that may pay off $1, and it's not any more complicated than that. The odds you see are the price that you pay. I think it's exciting, and we've seen the way that some of these poly markets and Kalshi have exploded. There's an appetite for these types of products, so we're excited to be involved.
I've never seen more interest in all things predictions than this past week at FIA Boca. So yeah, I'm looking forward to checking these out myself. I'm intrigued. But the folks are waiting for, Mr. Flowmaster. How long have we been talking about a tradable cash VIX? It does seem like binaries might be well suited to that. I'm just putting that out there, just hint, hint. I'm sure you folks haven't thought about that at all over there at Cboe land. But imagine those two worlds coming together, predictions and VIX. It's two great tastes that taste great together. So a lot of interesting stuff potentially in the offing. But I do want to check out this new binary on XSP. Have you checked it out, listeners? I'm curious. Hit us up, let us know as we go find out what the heck is going on out here. Is it a wild day in the markets from a volume perspective? The answer is yeah, we're putting up some numbers. This time on the show on Monday, VIX was already at about 1 million contracts. Not quite there today, but pretty close. And that is a pretty lofty bar when you think about it. I mean, the ADV of VIX is about 1 million. So putting up a day's worth of volume by showtime is a pretty wild feat, yet we're pretty close to it today. Closing in on 850,000 contracts today. The ADV is over a million now, 1.08 to be precise. If you're wondering what the hot thing is in VIX land today, it looks like it's some wild upside in April. In particular, it looks like the 70 par going up about 50,000 times for prices around 22, 23 cents. It's that time of year, listeners. We're getting all the fun upside. So we thought we'd put that out to you folks. Right before showtime, we asked you, hey, April 70 par, prices around 23 cents. Are you down for that? Are you a buyer? You sold to you? Or you just think those strikes are insane? And right now, 40% of you want to buy that bad boy. 30% are saying sold with both hands. And 30% are also saying 70 par WTF. And you know what? All of those choices at the end of the day are equally valid. As we go on out to SPY, is SPY looking hot today? The answer is yes, right around 7.8 million contracts. It's exactly 3 million below our ADV right now, which is at 10.8 million. So SPY looking hot. S 3.25 million. The ADV nearly 4.9 million. So a spicy day out there in the SPX. And then let's go out to small caps land, because we don't get a chance to talk small caps that often, except for this segment right now here on the show. And I know it's been a focal point for the Flowmaster of late. It's just how wild they were, how much they were outperforming the S&P. And then, of course, as we said towards the end of last week, they were starting to sell off pretty aggressively. If they had another sell-off like that, probably would turn red on the year. We saw that on Monday, and now they are red on the year and looking red again today. By the way, small caps off about 1.6% right now and putting up 1.8 million contracts. So they're already almost at a day's worth of volume. The ADV is a little over about 2.1 million. And I take it back. They have ever so slightly ticked mildly positive on the year by about 0.2 of a point. So they are fluctuating between red and green on the year as we speak. But either way, all that upside we were talking about earlier in the year has been erased, at least for now. And out to the Qs we go, listeners. The Qs, a little over 4 million contracts right now. The ADV 5.75. So they definitely seem like they're on pace for a pretty bonkers day out there as well. Is it a bonkers day in the single names? And it's another one of those days, listeners. Everyone's fixated on oil. They're fixated on equities. They're fixated on vol. It seems like single name equity options kind of fallen by the wayside. Only 285,000 contracts. That's pretty light volume. That's, a decent summer day. It's worth of volume out there. That gets us to our old pal coming in at number 10 today. It's Mr. Softy. If you've been following Microsoft, it's been a bit of a torturous run over the past month and change post earnings. They got up to nearly $500. We were talking about it on the hot options report. And a lot of people were loading up on those pars, and they did not turn out well. Earnings were not good. It's been mostly red ever since. That said, it has managed to claw its way back north of the par strike, trading 404.62 right now, off about a quarter today. So got as low as looks like 401.82 today. So they were threatening that par strike again before bouncing back off of it. So if you're a Microsoft bull, at least for right now, you're happy that you're still north of 400, putting up 285,000 contracts for the number 10 spot. Number 9, talk about everything old being new again. It's Micron, 285,000 contracts. What a year they've had. In fact, they're almost trading the exact same price level as Microsoft right now. They're 406.70. That might be a fun little will you, won't you, who would you like better type of poll like we did last year with Palantir and NVIDIA. Maybe it's time for a Micron Microsoft head-to-head. Got to buy one and hold it throughout the end of the year. Which way you going, Micron, or you going Mr. Softy? I know right now which way I'd be going, but it's a wild year for Micron. Number 9, 285,000 contracts. Unlike Microsoft, Micron is up nearly 30% so far year to date. So a wild year for Micron. Given some back out there today, $11.50 to the dark side, or 2.75%. Trading again right around the 407 level out there. So a wild day, a wild year for Micron. Number 8, it's Intel, my old stomping grounds, 45.66, off 2.33, or nearly 5% today. So a lot of people have been looking at them and on the 50 handle for a while, loading up on 50s, retreating away from that strike today. Number 8, 306 on the tape for them. Number 7, out to it's been a name that's been popping up on our radar a little bit over the past week and change. This is Ondas Inc. Ticker symbol ONS, ONDS. Looks like they're doing a deal with Uncle Mike's favorite Palantir, and that's being priced into the stock today. 1076, up nearly a buck or almost 10%. So a nice little day for Ondas. Are you on the Ondas train, listeners? Seems like a lot of people are. Number 7, 317 on the tape. Number 6, the Amazonians. Amazon, Google, and Microsoft all over the FIA Boca show this year, which is kind of funny to see all these other players into the space these days. But that is the name of the game. Number 6, Amazon, 210 out there. 210, pretty much exactly off about $2.50, a little over 1%. Putting up 376,000 contracts for the number 6 spot in our countdown today. Number 5, Salesforce. A lot of people pulled me aside. I'm not sure why I looked like I was the Salesforce guy, but a lot of people pulled me aside at the conference this week to ask me if I had seen the dire report that recently came out about AI and its impact on a variety of sectors, including Salesforce. It specifically highlights Salesforce and the massive ecosystem of people who have built up quite a profitable living over the years, being the Salesforce implementation for Firmex, and how all of that is going away if you believe the dire reports coming out of AI and the ripple effects that's going to have on the economy and housing market and credit and everything else. And so it didn't sound too optimistic for their fortunes. But you know what? Salesforce not feeling it today, rallying nearly $6 to close, to trade right now, I should say, exactly at the par strike. So Salesforce getting a little bit of a lift today, putting up 386,000 contracts out there. They're buying back some stock, Salesforce. So Salesforce coming out saying, AI gloom and doom. What AI gloom and doom? We're buying back our stock. Number 4, out to the fruit company we go. 255 off 5 3/4 or 2.25%. So they are smacking the fruit company today. I haven't had a chance to dig in what's going on other than more sellers than buyers. Uncle Mike and his cabal, they need to get busy. Fruit company, number 4, 460 on the tape. Number 3, out to the name we were just talking about, Uncle Mike's other favorite. Yeah, it's Palantir. They're popping today, a little, almost $3 or about 2%. 154.5 is where they're hanging out right now. You know, if you've been watching Palantir of late, they got down into the 130s not too long ago. So it's been a wild run in Palantir. Number 3 today, 500,000 contracts on the tape. That means number 2 and number 1, they're our usual suspects. It's Tesla, number 2. Again, vacillating right around that par strike yet again. It sold off to about 394.65 earlier in the session, rallying. Now it's back to 400, pretty much exactly. Still off about $7.50 or nearly 2% on the day, but looks like clawing back from the abyss, at least for now. But of course, that means there's going to be a lot of action around that par strike. Stay tuned for the hot options report. We'll see what's lighting it up. And the big dog, of course, it's NVIDIA once again. When I say big, that's big in air quotes. Only 1.6 million contracts. It's just a light day across the board. No one's got time for single names today. 183.95 off $2 or about 1.1%. For the big dog, which is NVIDIA out here. Listen, of course, if you want earnings action, we had a lot of it on the docket still this week. We had NEO and Oracle. On Tuesday, we had Bumble and we had Petco. So Bumble, we haven't talked about them in forever. It looks like they had a good number because we saw a lot of flow coming out from them. And then we had Dick's on Thursday as well. So before the bell today, got Adobe after the bell today. So we got a few names to still keep an eye on out there. Check out the website, theoptionsinsider.com. Click on the options news and articles tab to begin your journey to the dark side. But now it's time for us to continue our journey. What kind of journey are we going to have from the Flowmaster's card today? I'm kind of excited. Let's find out, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get down to business today. Let's get weird. Let's get wild. Let's see what I almost said, Uncle Mike, what the Flowmaster has uncovered from his passenger seat out there. It's the odd seat out there today. What do we spot out there today? We're going out to Mosaic. This is the name we haven't talked about in forever, and all of a sudden it's been on our radar. Whenever I see Mosaic, I can't help but thinking of the old Netscape days. But that's a conversation for another day. Mosaic, ticker symbol MOS, MOS, trading 3160, up about $2.50 or almost 9%, about 8.5% today. So a nice little pop out here today for Mr. Moss, and they needed it. They needed a little bit of a shot in the arm. They were trading, even coming into the beginning of this year, they were trading all the way down to about $24. They did get as low last year in the big sell-off of down to about 22 and a third. So net, they are up now, and of course, over the last few weeks, they've had a nice little run. They were trading about $26 just about a week ago, exactly a week ago, actually. So they've had a nice pop, about $5 over the past week. So a good little run, including about half of that, almost $2.50 coming today, nearly 8%. But that said, Mr. Flowmaster, sir, this has a stock that's that reeks of upside. What did you spot out here today, sir?
Well, it definitely does. And on on days where the market's really getting hit, I do love to look around for kind of the real outliers. Now, Mosaic, as you said, it's a fertilizer company, even though it sounds like a browser company. And the stock's up. The option volume is really heavy. Like we're looking at 77,000 calls have traded today. Okay, the average daily volume is just 12,000, only 10,000 puts. So it's very lopsided. When I look at the volatility, what we see is kind of what we usually see, and as you said, kind of like heavy demand with an upside bias to it. Vol's higher and the skew is flatter. This is kind of the speculative setup. Now, I'm not sure if there's a catalyst or what. As you said, the stock's kind of been whipped around. It's in the middle of its range. But the trade that I saw that jumped out was a buyer of just over 9,000 of the April 37.5 calls. They paid $1.50. It was an auction trade, so we kind of are confident that it was a buyer. Stock was 31.69 then, but actually looking back kind of over the course of the day, that actually looks like it was kind of the top of the order flow. So there was pretty heavy call volume right out of the gate. And the stock lifted, basically from kind of 30.5 to almost 32. And then that block printed. So, of all that call volume, in a way, like I don't want to jump into the stock at that moment because it actually looks like that was the end of the order. In a lot of cases, so that strike itself is, 11,000 on the day, but there's also about 9,000 of the March 35s have traded, and appears to be a net buyer, and even the April 32.5 calls as well. So I'm not sure, maybe this is kind of a defensive play. It's as kind of the world's focus is on, the energy sector and the kind of potential impact to the economy, with oil over $100 a barrel. But this is an interesting one. Like I said, stock's already up 7% today, so I don't know if I would dive into the stock now, but this does seem to be a pretty significant shift. It's also the heaviest volume day that I can see back for a few months. So it is significant.
Who names a fertilizer company after the earliest browser on the internet? But I digress. That's whatever. I can't think of anything else whenever I see that name. But interesting stuff, Mr. Flowmaster. As we keep going up, let's find some more interesting stuff and some names we haven't talked about in a little bit. How about that, listeners? Let's go out to Barclays. When's the last time we talked about Barclays? It was probably not in a favorable fashion and was probably on vol views back in the day. But since then, it's been a little bit. Barclays, ticker symbol BCS, trading about $21 right now, off about $1.15, or a little over 5%. So not exactly a banger day out there for Barclays. On the year, they're still up about $5.50 or 35%. So certainly not mad at that if you're a Barclays shareholder. They did get as low as 12.14 back in the big sell-off back in April and May of last year. Since then, they've been mostly straight up. That said, looks like they did top out in mid-January around the 27, almost 28 level. So they have retreated off those highs. So kind of hanging out towards the upper middle portion of their range on the year. And let's see, what do we spot out there today? Looks like somebody, Mr. Flowmaster, might be feeling a little bit of their oats out here in Barclays, but they want some time. They want some time for this one to come to fruition. They came in this morning They said June 25s, how are they? And they got 45 at 70. So not a terrible market, all things considered, for Barclays going all the way out to June. They said, I will trade 3,136, good sir, for 60 cents. So pretty close to that offer. The stock at the time was a little bit lower, $20.80. So about a quarter below where it is right now. So obviously, in hindsight, you might want to be a buyer of those rather than a seller. But you do have till June, so not exactly a high delta option we're talking about here. If you're wondering, is there going to be an announcement between now and June? The answer is yes. It is on April 28th. So factor that into your analysis. Maybe that makes you like this trade. Maybe you like it less because maybe you thought you might be able to squeeze in two between now and June expiration. But Mr. Flowmaster, looks like a little bit of a potential nibble to the upside here in Barclays in June, sir. What are your thoughts?
Well, yeah, that's a good spot. I mean, it's interesting. You know, financials have really taken a, you know, they're not having a good year, and which I think is a little bit of a surprise to people because, you know, coming into the year, you know, the feeling was that, you know, financials kind of were in a good space given that where interest rates were and deregulation as well. I'm looking at the Cboe open close data because that trade was a Cboe trade. Does confirm it's a buyer. I don't believe that it's closing. Just double checking, but you know, I think that, you know, as I said, kind of when we get these, you know, pretty solid sell-offs, there's a lot of kind of, you know, people kind of putting on positions that they've been eyeing for a while. So this might be something like that where they've really kind of just they've had their eye on the stock, they like it, and, you know, as you said, they're giving themselves a few months, right? So this is it's not really a short-term trade. It will capture earnings. And I kind of like it. I don't, you know, the volatility is higher, but hasn't flattened out much. In fact, there's still, you know, we've one of the things that you know, Mandy Zhu on my you know, who runs market intelligence has been talking about is the steepness of skew, and there's been some pretty strong moves in there. We came into March and skew is very steep, meaning that in the SPX, you know, the puts were pretty expensive, and we had, you know, and we kind of hit this very volatile period. Things have kind of actually mellowed out a little bit, but in Barclays in particular, I am looking at that. You know, it's not the most active name out there. Average daily volume is only around 2,100 contracts, so you got to be a little bit careful about kind of how much you read into the data. But that skew is actually also kind of at its higher end of things. So I think, you know, one way I might play this is if you really like the stock and it's only $21 stock, maybe just selling some puts and trying to take advantage of that steep skew, you know, and keeping the position size pretty manageable. But, you know, remembering it's a $21 stock. So, you know, if you look at maybe the 17 or 18 strike puts, stock can't go below zero. So, you know, your risk actually, even though selling puts can be scary, you do have to keep in mind that stocks only can go to zero in the worst case.
Nice words from the Flowmaster. And you're right. I don't hate this one. I don't hate either way you broke it down, either on the put side or if you want to nibble to the upside in this one. It's an interesting one, that's for sure. And again, a name we haven't talked about here on the network in some time, which is always refreshing. But now it's time to make way for a newcomer here on the network, one that's lighting up the charts out there today. Folks seem to be loving it. What are we talking about? We're talking about Lightwave Logic Inc., ticker symbol LWLG. Listeners, trading $7.50 today, up $2.50. So do the math, nearly 50% on the day, listeners. A wild day out here in Lightwave Logic. What do? They develop and commercialize proprietary electro-optic polymer materials. If that doesn't explain it all to you, listeners, I don't know what will. But they're having a good day. They are partnering apparently with Tower Semiconductor. And the market likes that pairing out there, rallying the stock 50% in a day. Not a bad one. And I got a feeling, just call me crazy, I got a feeling we're going to see some call action out here today. And that seems to be the case. Somebody came in this morning with the stock, 90 cents lower, $6.59. So I hope they bought these. Let's find out. They came in and said March 7s. How are they? They got 25 at 45. Again, a wide market, but also it is Lightwave Logic, and the stock's moving 50%. So in that context, it's actually not that bad of a market at all. And they said, you know what, good sir, I like the cut of the jib of these calls. I will pay 45 cents. I will lift your offer 2,445 times. And right now they're looking like champions. The stock is exactly at their break even. So the stock could just hang out here for the rest of the time and they would still be okay. At the time they bought these, the stock was also at a 52-week high, and they showed no fear. They said, give me all that upside. There are no other announcements between now and their next earnings. The earnings are on May 7th, so you're not going to get those in this. This is just a straight up momentum buy, and it looks like so far they're looking pretty good. I haven't had a chance to go dig and see if they've bailed on these yet, but if they're smart, they might be thinking about that. Mr. Flowmaster, sir, looks like somebody caught lightning in a bottle here on these March 7s in your new favorite name, Lightwave Logic, sir. What do you think?
What I'm looking at is yesterday. So the biggest open interest change today, and I did not spot this one, so you have a better eye than I do. So 837 of the Jan of 2028 5-strike calls were bought to open yesterday. Now it's not a huge trade, and I'm just looking at there's some were bought in February as well, but yesterday's action looks to me like somebody paid $290 when the stock was $5 for 675. So these are, and these are Jan of 2028. These are long contracts, long dated contracts. But obviously with stock 7.5, we can pull up the price on those. Even without getting to it, I assume that they're probably trading around $5.5, $6 with stock up here. So I'm a little bit, and that was unusually heavy call volume yesterday as well. So there could be something a little bit funky foot here. What's interesting to me is, like, obviously obviously to us, the highest leverage is going to be in the teeny tiny out of the money calls, the shorter dated things, right? So this isn't the kind of option trade that jumps out as a somebody knew something trade, but it could be something where somebody knew something and they weren't really experienced option traders, so they just picked a call and they just picked something that would go up, and stock went up, and it sure has. So I think this is a very interesting one. And you're saying there's no actual headlines on it, right?
They signed a deal today, looks like, or with Tower Semiconductor, so they're partnering. So, and the market clearly liking that one.
Yeah, that's a wild one.
So someone are you implying there might have been some information leakage, sir? Is that what you're implying?
I'm just saying that it's interesting that the day before the stock jumps 48%, that the call volume was a little bit heavy yesterday, and it seems to be a pretty clear buyer. This doesn't mean anything, and it's tempting to cherry pick these situations. There's plenty of call buying, in stocks that don't go up, but I would sniff a little bit deeper on this one.
Might be time for a little bit of sniffing, listeners. But you know what? It's always time for this time of the show on Thursday, listeners. It is time for you folks. It is time for the mail block.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block, the portion of the show where we get weird, we get wild, and you folks often get weird and get wild and send in your questions, your comments, your insights, your pearls of wisdom out there. Let's check in again on our hotly debated, hotly contentious poll out there right now, which is all about the April 70 par call spread going up in VIXland today. Looks like you folks have been debating hot and heavy on it, but right now people still want to buy it. 41.7% want to buy that bad boy, and 33% say 70 par WTF. That is certainly an acceptable an acceptable response as well. And selling that bad boy with both hands, 25%. So yeah, we are kind of split. We're pretty close to it here in the audience, pretty much a third close to it for each. Get over there, add options, and make your voice heard out there. And you too can weigh in on the hot issues of the day, like we did back on the option block on Monday. The hot thing on Monday was again April upside. We asked you about the April 60s. They were trading for nearly $1 on Monday, 94 cents. And we asked you, same deal, buy them or sold to you. And 75% of you said sold to you. Right now, that's looking okay. But that's an interesting one. Nearly $1 for the April 60s. Even more interesting, we asked you folks this last week, and it's always fascinating to me to see what your thoughts are on some of these geopolitical events out there in terms of their impact on the markets and how long will it last. And, I can't blame a lot of you for saying, you know what, this is another thing that's going to be pretty quick and pretty painless, because so far you've been mostly right when you've been fading a lot of these events. How many times have we said it on vol views now? If you have upside in any vol product, you have to monetize the hell out of it very quickly, because these vol pops do not last. So when we asked you this question last week, I kind of thought I knew where you're going to come down, and looks like that was the case. We asked you last week, the escalating conflict in Iran is already impacting markets and volatility. How long do you think this impact will last? Remember, when we posted this poll last Monday, we had already closed green on the day, or we were about to. We were in the process of doing so. So you could easily see why a lot of you folks would be impacted by those. Hence, less than 1 week ended up winning our poll, 32.6%. Then we had a tie between 2 to 3 weeks, so right around 28%, and over a month with also 28%. And then coming in at exactly a month in that time frame, right around 11% out there. So it definitely seems like right now the over the month folks are probably going to take it, but we shall see. Hopefully calmer, cooler, saner heads can prevail. Mr. Uncle Mike, sir, what are your thoughts on our audience apparently fading the heck out of this Iran conflict in terms of its impact on the market? According to them, it should already be over. And then B, are you down for a little 70 par action in VIXer?
Sell it, baby. That's for the VIX. In terms of the Iran conflict, I mean, I'm personally after now that we've had a little bit of time to digest the news, I think it's going to be over around a month. That's when the 1991 Gulf War, that's about what that lasted. And I mean, it was longer than that, a little bit longer than that, but not much. But as unpopular as creating conflicts overseas is, I really don't think that the president would have done it if this was his plan to make this another 10-year conflict where we're occupying him for 10 years. I think he's counting on them, people taking over the government. But who knows? The one thing that we do know is the only source of real unbiased news in existence is a chart of the S&P 500, and markets are down about 2% on the year, even with this conflict. So that tells me the market doesn't really know yet. And if the market doesn't really know yet, I can't really say that I know. And that's my thoughts.
Mr. Flowmaster, what are your thoughts on our audience fading the heck out of this conflict in the Middle East and its impact on the markets?
Well, I mean, yes, we've had these shocks in Monday 35. That was a pretty high print for VIX. But, if you look at the VIX futures, it's challenging to monetize these spikes, right? Your timing, like, think about it. If you weren't paying attention Monday morning, you would have missed it. And so, the reality is buying the dips and selling the volatility spikes has worked very, very well for really the last 6 or 7 years, even 2022 when the market sold, right? It was down on the year. So it doesn't surprise me. That's what, our audience is leaning into. I probably would go the same way, but I do, I mean, the potential for something really terrible to happen is certainly higher than it was, than everybody knew it was 6 months ago. And so I wouldn't go all out to be kind of, short volatility or along the market, just because I think, I agree with Mike. I think this is kind of going to be a rocky road. And, in the end, the way things have played out, we come out on top, and the U.S. market and U.S. equities are the destination for capital. So, things have worked out fine in the past, and I guess that's really still my view. but it could be pretty choppy in the interim. So, as I said, I think it's a great trading environment. I think you have to be, picking your spots, paying attention, and keeping your bets pretty small because, as we've seen, 2% swings from bottom to top or top to bottom are very, they're very possible. We're seeing them. I believe we're going to continue seeing them. VIX around 25, 26. That tells us the average move, that we're going to be seeing for the short term is, over 1%. So, keep that in mind. That's, 60 so handles in the S&P, which, can make option prices move pretty extremely. And then, as we're seeing today, you get some pretty big sector divergence. Energy and materials and metals could go in one way, the rest of the market can go the other. And then there's days where everything sells off together. So, I think that my message would be don't make any assumptions about how this is going to go. Don't get tricked into thinking that how things are playing out. Just kind of look for opportunities and keep doing what you know how to do.
Speaking of what we were doing here in our chat, I see Nichols asking, did I shoot any hoops with Scottie Pippen down at FIA Boca? No, alas, I did not. Again, one of the many things I give up for you folks. That was literally the 1 hour we had to be live on the option block. And that, of course, was the exact same time that Scotty was taking photos and shooting hoops. So, alas, no photo with Scottie Pippen. I see the chat also saying I was playing tennis with Serena Williams. I missed her as well. So, no Serena Williams and no Scottie Pippen on this trip. Again, I like you folks too much. I'm doing the content. I'm not hanging out with the celebrities. But it's time for us to hang out as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on till the next episode. And as we've been talking here, we're seeing things get a little bit spicier in the sell-off, but not terribly. The S&P off about 1.3% now, Dow off 1.3%. Nasdaq off about 1.5%, almost 1.6%. Interestingly enough, VIX cash continuing to come down from the highs it hit earlier today, right around 25.65 right now in VIX cash. So off of that 26 handle we were hanging out at to start the show. But around the horn we go, Mr. Uncle Mike, sir. What are you keeping an eye on till the Monday episode?
Well, I want to see if bonds can get some type of life in this, in that we've had such this. We have not had that much of a sell-off, and even so, we've not had that much of a buy-in as a rush to safety by any means, and so, or we haven't had it. We've just had a rush to oil. So I'm going to see if bonds can actually get some life happening during this, and of course, continuing to watch. Wow, how do I put this? Everything.
And Mr. Flowmaster, while you're on your road trip, sir, what are you keeping an eye on aside from the world's largest office chair on the side of the road?
Absolutely. So I'll be looking at, there's a couple little earnings. I think we have Beyond Meat might be tonight and a couple other names. But it's the macro picture that I really the utility got kind of flat. I wouldn't really call it contango. I'm interested in how Russell would characterize it, Dr. Vix. But, I think the market is just, we're repricing volatility to stick around for a while. And, I think that's it. I think, just trying not to react to headlines or, what you think is happening in the world is probably the goal, and sticking to plan. And if you want to, carry a little bit of risk, whether it's, upside or downside, I'm not afraid to kind of put on a little bit more risk when things get choppy. But again, I think it's a time to be careful. There's no reason not to trade and kind of commit capital to ideas that make sense. But I don't think, on a day-to-day basis, who knows, right? It's going to be choppy. We're going to have our 1%, 2%, 3% up and down days. And I think avoiding panic and avoiding getting yourself into a corner is probably my main goal.
Well, we're beyond a corner here with the show. We are coming up to the end. Mr. Flowmaster, before you continue on your road trip, sir, if folks want to check out what you got cooking, maybe even learn a little bit about these new binaries, where should they go? What should they do?
Just head over to Cboe.com. There's all sorts of great resources there, including pages on our new products like the Mag 10 index options and SPX and XSP. And we also, that is the best place to stay informed as we continue to get ready to list our own event contracts and learn about them. And, as I said, I think that, for people that are brand new to derivatives, event contracts are a great stepping stone. For some people, it's just, it's exactly what they're looking for. And for other people, it might complement kind of, what they do in option strategies themselves. So Cboe.com. And then if you're looking for anything on our data platforms, it's Cboe.com/RMA. For risk and market analytics, you can check out LiveVol, Trade Alert, Silex, FT options, and the data shop, and request trials for some of those platforms. And we're happy to help you out.
Mr. Flowmaster, I appreciate you joining us from the road trip. This is our first road trip, Flowmaster, so that was a fun time. You are now free to go check out the world's largest ball of yarn, and we'll talk to you next week. And Mr. Uncle Mike, sir, where should folks go if they want more Uncle Mike goodness in their lives?
Check out my YouTube channel. Just type in St. Charles Wealth Management. New videos will be coming probably in the next week or two. Also, if you'd like to have a conversation with me, I'm a financial advisor, and I actually like the option product. Go to stcharleswealth.com, book an appointment with me. Always happy to talk to any of our listeners, even Scottie Pippen if he wants to call.
Even Scottie Pippen. Not Serena, though. Just Scottie. Out there. Check them out. stcharleswealth.com is the place to go. That's going to do it for us on the old OB. Back again in a little bit. Probably going to talk some crude, spoiler alert, on TWIFO. Going to talk some equities, all sorts of fun. Join us on This Week in Futures Options coming up in about half an hour if you're listening live. Coming up, just hit next on your device of choice if you're listening on demand. Then if you want more vol in your life, as the Flowmaster alluded, I'll be back tomorrow with not just Dr. Bix, but also Mr. Bixologist, his nemesis in life. The two combatants of our Vol Deathmatch 1.0. They meet again head-to-head on Vol Views. What sparks will fly? You got to tune into Vol Views tomorrow. And then we're back for all of our pro friends talking some weird, wild paper on options oddities. Then we're back to wrap up the week on Thor. Then we all take a nice, hopefully quiet weekend off. Doesn't seem like we're in the quiet weekend game right now, but you never know. Back again on Monday for another trivia battle on another episode of the Option Block. Stay safe out there, everybody.
The Option Block is brought to you by Cboe. Cboe's suite of S&P 500 index options, SPX and mini S&P 500 XSP options, allows traders to speculate on the direction of the market, generate income, and hedge for downside protection of their portfolio of stocks. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/SPX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of Cboe Global Markets Incorporated or any of its subsidiaries, collectively Cboe. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the Cboe products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle.
You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app. Available in iTunes and on Google Play.